There's fear in the markets. So, is this the right time to be greedy? Let's discuss. My name is Den Slim and welcome to another episode of Monday Market Outlook. So last week, the BSP came out with their September decision to keep rates at 6.25%, but opened up the possibility of a November rate hike if inflationary pressures persist. So what are these inflationary pressures? No? So first we have WTI crude currently at $90.29. The pullback at 88 was instantly met with buy demand, and chances are we are looking at the possibility of $93.66 a barrel in the coming weeks. Now next we have the Philippine peso versus the dollar currently at 56.81, and with the threat of US rates going up, we could push the peso dollar exchange rate up to even 57. On the rice front, while we said that we have become the top importer of rice, reducing import tariffs to rice could ease some inflationary pressures as food comprises 38% of our CPI basket. But the thing here, if we look at the Philippine 10-year yields as compared to the US 10-year yields as it stands, the US 10-year yield has broken out of our key resistance here at 4.36%. Ideally, the Philippine 10-year yields should maintain a certain level of spread to properly defend the peso. But in recent months, the US 10-year yields is slowly catching up, which is causing the peso to significantly weaken against the dollar. Now, the latest BSP statement opening up the possibility of a rate hike did affect our 10-year yields last Friday. But if we look at the gap, so we have the gap between the Philippine 10-year yields and the US 10-year yields going down. And while this gap is going down, we can see the inverse relationship of this to the Philippine peso. Now, this gap here has widened again to critical levels. So this will be a key point in the decision this November on whether to raise rates or not by the BSP. Last week was a busy week as we saw a slew of rate decisions. Bank of Japan just recently announced that they will keep rates unchanged, continuing its easy money policy due to concerns of uncertainties in their economy. But we have most developed markets right now have paused their hiking cycles and are reaching a state where they think that rates are already at appropriately restrictive levels. But just like the Fed, everybody is maintaining a hawkish stance as they are leaving further rate hikes on the table if inflation's downward path does not continue. Quick look at the global weighted interest rate shows rates at their highest levels, even higher than the 2008 financial crash. But we are starting to see more central banks here. The orange line here shows the percentage of central banks starting to cut rates. And when central banks start to cut rates, they're not doing this out of the goodness of their hearts. It means that they're seeing something starting to break in the economy and they are easing rates to stimulate economic growth. So does this mean that we are already in the midst of a global recession, right? So far, looking at the market performance for Asian markets, the Philippine stock market was the worst performing market in the week of September 11 to 15 with a drawdown of 1.5%. But not all news is bad news, as all this downward pressure on our market has put our market valuation at its lowest since the pandemic. 17.38 is the historical average, and our PE ratio is at 11.35. This is a very cheap rate, and if this even reaches 10, this is actually a good chance for us to go all in. Also, last week we saw some significant movement in the index as we finalized the MPI delisting, and of course AP, with their public float going down to 19.93% after their shareholder buyback was taken out of the index. So Bloomberry and CNPF is in, Cebu Pacific and Double Dragon MPR went into the mid-cap index, and of course in the dividend index, AP, MPI out, and CREIT and RRHI is in. Now let's look at the PSEi chart. The market rebounded from our 6,000 support level to end the week at 6,142. Could this hammer doji here with follow-through days, could this mean a reversal for the markets? But in the meantime, I continued to do some Christmas shopping as we look into some of the stocks I bought last week. So we have Metro Bank hitting our buy zone here at 52 pesos. Now with the possibility of a further BSP rate hike, could we also see a bit more upside for banks? So this was a good follow-through day for Metro Bank. Hopefully you were also able to get some shares. Of course, Aboitiz Power was a good buy at 30, especially even below 30. Could we go lower? Yes. Could this be a dead cat bounce? Yes. Especially after this much selling pressure, any rallies here could be met with sell demand. And if it reaches 30, we could see the next level possibly at 28.50 or 28. But at that point, I would just buy more. Because, so what if they are out of the PSEi index? This is a fundamentally great company. At its current price level, the dividend is around 6%, 7%. Even the company owners found the price level to be so ridiculously cheap that they didn't care if they were booted out of the index. They just had to buy back shares at this level. Now, if you've heard the saying, buy on rumor and sell on news, then that's exactly what I did, and I was lucky enough to sell Bloomberry at 11.48 because after the news came out of its inclusion in the index. Now, if we look at Bloomberry all throughout the year, we already gave our recommendation to buy Bloomberry. It was our dark horse pick during November of last year, and all this time, it was, well, aside from the fact that it's a great company, it's a great stock, it was also driven up primarily on the rumors that it was going to be included in the index. Now that it has become news, we sold off on the news, right? So that's what buy on rumor, sell on news is. And you can see the effects on the drawdown here as all the speculation has already ended. So I also bought SMPH. I think the stock is oversold, and whatever issues it had with its reclamation problems should already be priced in, right? CNPF also is another example on buy on rumor, sell on news. So we bought on rumor here, and you should have sold on news here. But, CNPF is still a good company. You can hold on to it, but take profits when you can. Now, going back to the PSEi charts, overall, a good bounce off of the 6,000 level. But remember that we are currently at 6150 resistance. Now, we are still at the back end of September, and we could still see a retest of 6,000 support. If it doesn't hold, then our next support would be at 5,850. Now, the ideal scenario here is that it retests 6,000, right? And after retest, we break out of 6,150 and then test 6,150 as a strong support before continuing its rally going up. Now, this would be the most ideal scenario, as this would prove a trend reversal for the PSEi. But as it stands right now, we are currently at a critical level, 6,150, and we could either break out, defend this zone, and go up again, or do a double bottom and do this scenario, right? But either way, if it does go down to these levels, then this is again a great opportunity for us to buy into some of our stocks at bargain prices. On to the global markets, we have the most anticipated event last week as the Fed came out with their decision to keep rates at their current levels at 5.25 to 5.5. But the higher probability of an additional rate hikes this November or December, and with rates remaining higher for longer than expected, caused a brutal reaction in the markets. Also, US jobless claims came in last week significantly lower than expected, 201,000. And it is the lowest level since January of this year. So we have a resilient job market, a strong retail market, and while inflation in the housing market has tamed, the Fed feels that there's still room for them to raise rates to make sure that inflation stays down. And this caused the 10-year yields to spike and break out of our resistance zone at 4.35. So let's look at the 10-year yields here. Look at that breakout of 4.36. Remember, last time rates were at this level was before the 2008 housing bubble. And if we look at the 2-year yields, we did say that if it reaches 5.11%, then it's going to cause a lot of problems for the market. And that's exactly what happened last week as we saw the S&P 500 suffer its worst week since March and its worst one-day drawdown since March 22. Let's look at March here. This is March. Look at that. Now, we mentioned last week, this looked like a bearish engulfing candle, and if it did break down this trend line here, we could see the S&P 500 move towards support 438 or 433. And that's what happened. It even broke down 433 support level. Last Friday, the market tried to rally and was instantly met with sell demand. Look at where it settled at 4,323. So the market is now on a downtrend, and the brutal sell-off in the last 3 days is most likely going to push the markets lower. Let's go back to our historical charts and let's see where we are. Right, so this is the September seasonal movement in the past 70 years. See here where we have the double top, see? And then here we have the spike. Could this be the spike here, right? So as we approach the back end of September, again, based on the past 50 years, the week after the quad witching event is always negative, with 33 out of 50 times the market has been down by an average of around 0.85%. So if we go back to the charts here, we've broken down from this, right? And what's the next support level here? There's a demand zone here. So 4,300, 4,280. Now let's look at the moving averages. We have the 200-day moving average right here at 4,273. Let's draw a Fibonacci chart here. See the support levels here, and we have here 4,259 as the 0.38 drawdown fib. So we see here a demand zone, we see Fibonacci levels here, and we see 200 EMA all converging in this very critical area. So there is a high chance that the bulls may only come in when the market hits these levels, no? So looking at this week's economic calendar, we will get the September consumer confidence report as well as the second quarter GDP results. Personal consumption expenditures will also be on top, and we will see if inflation pressures from oil will continue to push the numbers up. So that's it for this week. If you found this episode useful, please like this video, subscribe to the channel for more updates, and as usual, good luck on your trades, manage your risk accordingly, and I'll see you again next week. Bye-bye.